Happy Monday, traders. It is 8:01 a.m. Chicago time on the 30th of April, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Market stance this morning. Crude oil is the low, is lower, is the laggard today, down or off 73 cents currently on a June contract, down 1.07%. As well as gold, the pound, the yen, euro, FX. Those can be seen as safety instruments. However, the U.S. 10-year is up up half a tick actually. Looks like the Eurobond's up 6 ticks, and the bonds are up 4 ticks. But the rest of the market's strongly higher, or relatively strongly higher, I should say. The S&P Mini's gapping up. The allocation looks like it is to risk this morning. So that's our stance as we come in. Being as it is Monday, a quick review of the calendar shows that this week has a lot going on in it. Just across the board to PMI, Chicago PMI today, pending home sales. There's a holiday in China and Japan. Tomorrow, there's a Labor Day holiday in the UK, but there are also some there are various releases. Is this correct? Labor Day holiday? I got to check that. And then Wednesday, the FOMC, among other releases across Germany, the Eurozone. Thursday, there's a lot going on as well in the U.S. And then Friday is non-farm payrolls and unemployment. So this week, expecting a lot in terms of action. For today, expecting an interruption in the auction at 9:45 Chicago PMI. That number comes out early at about 9:42 Eastern. Looking for 58 for April. And then pending home sales at 10. Other than that, we don't have much going on. I'm looking for earnings. Anyway, so you can, if you need a calendar recommendation, just drop me a note at on Twitter, FuturesTrader71, or on my website, futurestrader71.com/contact. I'll be happy to provide a link to a calendar. Other than that, let's take a look at what we expected Friday versus what we got. Here's Friday's key plan. The thing with Friday's key plan is that kind of worked, but kind of didn't. We ended up opening and testing that high right away, and dipping deeper, and then being stuck in the middle. So a lot of what was expected for the session happened. Again, the expectation given the close on Thursday was that we would retest the high and put in a higher high. But also, the expectation was for the market to at least dip to 2666, which would give us a test of balance, and it ended up dipping quite a bit lower. I could go into scenario 2 and so on, but I don't see the point. Here's what actually happened. We open, we test again and fail, test the prior high, so we extended the prior high very poorly, and then it's just selling from there. And so we ended up dipping a lot lower than the point of control. We ended up pushing all the way down into 57.75. 26.69 had a lot of volume on Friday. In fact, it had so much volume that it shifted the point of control for all trading that has occurred since February 2nd, the drop day. It shifted that MC point of control 26.69 and a quarter. There's quite a bit of confluence in terms of volume at this 26.69 price since last week. So Right now, the market's in a pretty consolidated state inside of this balance zone. I know it's forming a wedge in the bigger time frame, and it just seems poised to break. So this week's got a lot of reasons for it to break, the rates and unemployment and all that stuff. So this week I'm expecting some pretty decent movement. Let's take a look at the bigger picture, which is right here. Let's clean this up a little bit and remove these profiles. And this is basically a daily chart, RTH only, or regular trading session, from the last high to the last low. The last all-time high is way up here, 28.80 and a quarter, adjusted for the June contract. And essentially what we've done is we've just ping-ponged around with a point of control right where we are. So we're trading at 26.76 and a quarter. Friday, we finished right on top of the point of control for this entire region. And so what we've done is we have we have put in an all-time high. We've dropped, pushed pretty deep back in, and then dropped for a higher low, and have been trading basically in this kind of a wedge for some time. So we have this formation here that looks like this. And we're right on top of the point of control. You can see there's a ton of volume going on. The 27.18 stopped just short of the 27.20 peak right here. The next most accepted area. And below us, we have the most voluminous area, and we are stuck here. So we're coiling and coiling and coiling and coiling, and it looks to me, on a long-term basis, it looks like a topping formation. Remember, the market doesn't rally, put in a high, and just explode downwards. It rallies, and it puts in multiple failures before it starts to rotate. And it looks that way. Now, I'm not saying that the top is in, the bull market's over. Don't anticipate it. Don't read it that way. I'm simply saying that it is trading in what would traditionally be a topping kind of behavior. It's rotating down quite a bit on the down days. It's rotating down quite a bit, like we saw last Tuesday, I believe. And we're holding steady here. We're in this holding pattern right at the MC point of control. So we're in complete balance. Just not pretty at all. Let's look at the overnight action. The overnight has really terrible volume. 67 or 64,000 contracts, 65,000 contracts versus 110,000 or so. 110 to 125,000 expected in the overnight session. It opened, went up strong, and went right back to the open again. There was a delayed open on the CME yesterday. They had some technical issues. They did not open at 5 Central or 6 Eastern. They opened about 37 minutes late. But other than that, we've pushed through the high of last week and are poking through. We're above the mid, above the last week's action, and holding steady in what looks like a P-shaped profile. Okay, P-shaped profile, and that could signify. Did I say something different? It's 95,000 contracts. A P-shaped profile looks like some long liquidation and balance, so it quickly moved off the bottom. So that's a short covering and balance in it. So it quickly moved off the bottom, and it's finding balance up here in the 2680 area. So the overnight session is telling us that Buyers are in control. However, even though the overnight inventory is long because we are currently trading, this is the difference right here. This is the delta in price between Friday's close. Okay, thanks. Between Friday's close and today. So that gives us inventory, which is long. But look at the delta here. The delta is just slightly long, and it's not, there's no real commitment here. Let me expand that scale a little bit. 3,100. Overall, expecting a lazy Monday today. We had a very, very balanced, very choppy Friday. And this morning, I'm looking for the market to open out of balance a little bit, but I'm expecting a reversion back. So open auction, I expect this to drop back in, come back into this 2669 this morning, and then consolidate for much of the session. The high is likely to be taken out at some point, but overall, I'm expecting it to just be a quiet session with complete balance. Okay, that's barring news. News interrupts everything. News forces participants to reprice the auction, and I'm not considering that my plans because I can't predict that. Other than that, the expectation is for an open auction that tests lower, and then we have an impulse up that takes out the overnight high, challenges last week's high at 2683.75 for a poke, and then consolidation up top. I'm looking for a continuation of this P-shaped profile that we had in the overnight. So I'm looking for a little bit of something that looks like this in terms of scenario 2. Okay. The selling scenario is the third scenario, the tertiary scenario. Open, test, drive lower, get tangled in the point of control, and then begin to drift lower into Friday's low to push down into the 2650 area. Expecting good liquidity down there in the first test, 2650, and then for a pushback up into the range. That's the third scenario. Not likely, but those are the plans that we see for today. Okay. So knowing that those are the plans, our job now is to wait for the market to open up and show us what it wants. So your job then becomes all about measuring which side is stronger, which side to lean on. And if you get evidence that the market is balancing down and is basing and is ready to shoot up, then you know which plan to pull in. Okay, so this is just, we're not trying to predict the future with these plans. We're simply looking to have our minds ready for whatever the market's throwing at us through our scenarios, so that when we execute, we're executing out of instinct with a plan to back us up versus executing out of emotion with the dome guiding our exits and entries and stops and everything else, which is just a bunch of noise. Good luck today, and we'll keep talking this week. Take care.